I'm Damian Pearson, partner at Oryx Global Partners, which is a private equity fund investing in resources. So first of all, I'll ask Warren to come up and join me.
I'm Warren Gilman. I'm the founder, chairman, and CEO of Toronto Stock Exchange listed Queens Road Capital. We're a natural resource investor focused on converts, amongst other things focused on copper. I'm a mining engineer originally, Canadian, you can tell from the accent, but I've lived in Hong Kong now for 25 years. I was a mining investment banker for a few centuries, and then for 10 years I ran Li Ka-shing's money in the mining sector for full time from 2010 to 2020. Yeah, it's in my blood, and I live and breathe this stuff. So looking forward to our chat. Over to Artem, who I've known for many years as well. So great to be sharing a panel with Artem.
Thank you. Thank you, Warren. Warren happened to be an advisor to ACGMetals, of which I'm a founder, chairman, and CEO. That seems to be going thin now. ACGMetals is a copper and gold producer listed in London. We started our life as a SPAC, but we became a normal company in September of last year, producing tons of cash flows and looking to consolidate the copper sector worldwide. Actually, after this panel, I'm presenting ACGMetals, so please stay and listen. Thank you.
My name is Tevis Michaud. I'm a senior investment advisor at Canaccord Genuity. We're one of the sponsors here, and I actually had the privilege of being here in March as well. I was on a panel with Warren and Damian back then as well. I think we were talking about gold. So yeah, pleasure to be here again. Thank you for having me. And I've been at Canaccord for coming on 18 years now. I'm based out of Vancouver in Canada. So being at Canaccord for that long, inherently mining and metals has kind of been in my blood as well. So I've been doing it a long time, and it finally feels like we might have a market here. So looking forward to chatting with everyone here today.
Good morning, everybody. Stephen Goodman here. I'm a former investment banker. I worked at Canaccord as well. And definitely, I would say mining is in the water. You're in mining meetings before you're at your desk in the morning and throughout them during the day. I worked in New York as a banker for 15 years as well. We have now transitioned to some private entities. We have copper assets in the United States. And in my current role, that's full-time, I'm the CEO of Bahia Metals. We're moving forward with an IPO with Canaccord. Tevis is a big backer. And it's a nickel project, but we're here to talk about copper, and I do have significant experience in copper assets as well in the U.S., as I said.
Yeah. Great, thank you. Well, a few reformed bankers are up here. Let's get stuck into things. Let's get stuck into things. I mean, copper's had a great run, hit $5 a pound in the last week. Problems at Grasberg. We've got, deficits of, arguably a sort of supply deficit coming up at 4.5% offline in terms of where we are. And if you look out, some analysts have got the sort of this 1 million ton shortfall projected by 2030. Just wanted to go around the sort of panel and maybe just starting with you, Warren, looking and saying, how real do you think that is in terms of the deficit? And, what are your sort of thoughts about this current price?
Well, I guess probably like most of the panelists, I'd have to declare up front my bias and conflict because I am long copper, so I could be accused of talking my book. But my response to that is, yeah, the deficit is real. It's underestimated, under forecast. It's going to be a heck of a lot bigger than what people say. Whenever you look at analysts or metal consulting groups forecasts, they take companies' announcements as gospel. The company says we're going to bring property X into production in 2028, and so there it is. That's your forecast. Well, we all know that's not reality. It never happens. It always takes longer. Sometimes it never happens. So the supply is always less than what those forecasts say. The demand, the demand fluctuates, but you get a pretty good handle on demand. Supply is always the thing that's a bit of a black box, and it's always overestimated. You talk about, production problems at existing operations, and 9 times out of 10 we underestimate what those production problems or interruptions are going to be. But especially on new operations coming into production, it always gets delayed and it's always slower to ramp up. So perhaps a long-winded response to say the deficit's going to be a lot bigger than what people are currently, quote unquote, estimating.
I certainly hope that the deficit will not be here soon. Would allow me time to buy a few more copper mines. But the reality, unfortunately, is very much what Warren underlined. If you listen to CIU at the London Metal Exchange Week on Tuesday of this week, they said that for the next 10 years, the industry needs to invest $130 billion to keep with the current projections of the supply. And their projections of the supply depends, 50% of the supply depends on uncommitted projects. Again, echoing what Warren said, there are likely to be distortions to the supply. And when you come to demand, yes, there is a traditional sources of demand, construction, grid, etc. But nobody knows how much money people are spending on military and defense. And copper is what it is for the ammunition shells. And I'm not even talking about the new sources of demand, data centers for artificial intelligence, robotics, etc., etc. So we're likely to see distortion to supply and likely to see pockets of demand growth, which is probably will lead to the copper hitting a new level. I don't think it's going to go to 40,000, even 20,000, as some observers say, because at some point there will be substitution from aluminum. But certainly we are set to see a new pricing levels in the copper sector globally.
Yeah, and I guess just to follow up on that, I'm on the investment side, and we can all see the increase in demand for copper, but just on the investment side over the past 15, 20 years, there's been such a low level of investment into the copper space and commodities in general. So the for the new projects to come online, investments to fill that demand on the supply side, it just isn't there, right? And now you're starting to see those investments start to flow into the sector, but that's going to take 5, 10 years plus to start to fill that demand supply deficit. So it's simple economics here. There's increasing demand, not enough supply, and I think we all see it here. And as Warren pointed out, I think we're all probably a little bit biased, but at Canaccord, we definitely have been endorsing that trade for a number of years now, and it's starting to pay off. And you're starting to see the increase level of investment is increasing drastically, and finally some of the stocks are starting to play catch up, but we can get into that a little bit later.
I'm tempted to be a contrarian and say we're going to have an oversupply of copper, but I don't think that would be a wise thesis. I do think that if you're an investor in the space, that investing playing the rise of copper price is probably not wise. I think there is going to be volatility. I think there's going to be unknown volatility. And I think, piggybacking on what Tevis said, picking your spots to invest into companies where you're going to see considerable inflow of capital to that company to move it forward to the next level, and a clear path to a production story is going to be very important to see a return on your equity investments in the copper space. There is for sure significant large pools of capital on the sidelines looking for large assets and willing to spend significant money to put them into production. I don't know if the equity dollars are there yet, and so I would just put a word of caution out to be sure, again, when you're looking at an asset, to make sure there is going to be enough equity dollars to move it forward.
Thank you. I mean, just picking up on a few of those themes, right? The demand side. I mean, Is there a bear thesis for copper? I mean, how would you formulate one? I mean, everybody here is very positive. If I look, there's you look through the sort of price forecasts. They do range a little bit. There is one bearish forecast out there I managed to find of somebody who was sub $3 a pound copper long term, which is kind of pretty tough to believe. But that was in a belief that intensity in China. This is a big financial trade at the moment. I don't know whether the panel have got any comments on whether there is a bear thesis out here or whether
you point out a couple of good things. I guess first point, whenever you're part of the consensus trade, you worry that you're the idiot. And copper has been a consensus trade now for decades. And you see it in the transaction prices for assets, even when you don't see it in the market. For the last 10, 15 years, there's been a tremendous dislocation between equity values and asset values. And equity values were often valuing companies at spot or maybe a discount to spot, whereas private transactions on assets were always at effectively a 50 cent to $1 per pound copper premium. So people were buying assets and they weren't buying the equities. And so if you were an equity player like we all are, and I suppose everyone in this room is, you weren't getting the benefit of the trade. So that historically is a bad mark for copper investors. Point number two, copper has always been the metal that has a great future, and the future keeps getting pushed back. We keep waiting for this absolutely rip-roaring bull market in copper, and it teases us and then it pulls back. And we saw it a year ago, we saw it 2 years ago. Copper is doing well, but obviously it's not having the moment that gold is having. And we could all talk forever about the gold price right now in this, the greatest bull market since God created this element. Copper isn't there yet. So that's another knock against copper. And then the third thing I would say is what you mentioned, China. At the end of the day, we can talk about AI and we can talk about EV and all of that futuristic stuff. At the end of the day, copper still depends on China demand. And you know what? Real estate in China is a problem. GDP growth in China is a problem. Deflation in China is a problem. So that has a bigger impact on copper, both emotionally and fundamentally, than anything else we'll talk about. And we can't forget that. So there's your negative thesis, Damian. There are 3 really good points for why, you know what, maybe I'll take my copper dollars and just buy gold for the moment. You could argue that.
Yeah. I mean, maybe you're sort of looking, I think the supply side is perhaps what's, that's what gets pushed out more. And as you talked about, the panel talked about that, when analysts sort of form these views, it's Emily overconfident about supply coming to market. I mean, maybe it'd be good just to get a few of those views. As there's Artem, you're developing a project, just some of the issues which people are seeing, bringing supply to market, the bottlenecks, and how we expect those to change over time. Places like Peru, Chile, is it local issues, regulation, capital intensity? What's the issues in bringing supply to market right now?
Lack of good projects. I mean, there's very few that de-risked and ready to be financed. There are plenty of exploration worldwide, but converting that exploration into BFS studies will take much longer than anybody would expect. By the way, I would add one more negative potential to the copper market. As one investor told me yesterday, it's too good to be true. But there's so much hype about AI and data centers, and it's going to bust at some point, and all these data centers will not be built, right? And there will be emotional fluctuations on the market, even though, as Warren correctly say, it's not about any of that new technologies, it's about China demand. But finding and financing good new projects is very difficult, as you know.
Yeah, absolutely. I mean, do you think there's any technological breakthroughs which are going to help here? I mean, it feels like, and maybe it'd be just good to discuss a little bit. I mean, we can get into this about the investing side, but, what about some, there's some technology plays which have done quite well, attracted quite a lot of capital. Are they a good way to play the copper thematic?
Yeah, that's a great question, a great point. We've seen significant deals trying to leverage that technology advancement in the copper space into certain assets. It hasn't translated to returns yet, for sure. And I'm not convinced that we've reached the level where the new technologies are actually going to be a differentiator in terms of bringing low cost or low grade copper into production. I think there's still miles to go in that space, but for sure the capital is pouring into that space and the advancements are there. Haven't seen it yet in the field to the degree where it's going to make a material effect to investors like ourselves on the equity side in the copper projects.
Very good. Maybe just sort of moving on and talking a little bit about. I mean, it's the sort of out there. It's the tariff word. How do tariffs impact the copper market?
Did you say tariff or tweet?
Equally the same, right? So any view on how sort of, it's tough to predict, but, U.S. policy, but any view on what the tariff situation could do for this market?
It has an impact on sentiment. Obviously, if we have a trade war between China and the U.S., then that impacts global growth. If global growth declines, then copper consumption declines. They go hand in hand. We talk about Dr. Copper being the temperature of the world economy. So obviously there's an impact. If you don't believe that that's going to happen, then it's all noise. And boy, we saw a lot of noise, what was it, 2 months ago when Trump announced the copper tariffs. And all of a sudden, U.S. assets screamed to the ceiling, and everyone else was saying, oh my God, we got to get a U.S. project. And then 3 days later, they said, oh, we didn't mean it. There are no copper tariffs. So it was just noise. So bottom line, if we have a China-U.S. trade war, which right now is, highly likely, I would say. Well, I guess we're probably in the middle of one right now. So if it ends, then it's all green light. If it doesn't end, then that's a pretty big headwind for copper in the near term.
Yeah, and I think that does that. It's a good point. There's a lot of noise there as well, right? But ultimately, it creates volatility in the market as well, and a little bit more uncertainty. And being from Canada now, copper's kind of on the critical metals list, and now we're wanting to develop more of our assets internally and fast track production. And you're seeing that kind of in different countries globally as well. So I think that's going to create more volatility in this sector for sure. But also, there's just been more and more inflation. It just costs more and more to get anything done, right? So to build these projects and to build them out, it's just going to cost more and more. So the majors and the producers can only buy so many other producing assets. So the assets that need to get put into production, there needs to be real capital spent, and but the cost to do that is increasing incrementally, kind of every day with inflation, right? So the cost to put these assets into production are going to continue to increase. We all like the longer term demand supply factors here, but it's certainly going to be volatile, like we've all pointed out, right? But for kind of a longer term bet, I think if you pick the right horses, the right assets, the right management teams, the projects that will get funded, I think longer term it's a good investment over the next 3 to 5 years. But you have to be, as we point out with tariffs and whatnot, the jurisdiction is equally as important.
I mean, if anything, this only creates uncertainty, and uncertainty is not good for a project which is supposed to last over 4 or 5 U.S. administrations.
Yeah, absolutely. I mean, maybe just sort of talking about, in terms of the market and delivering supply. I mean, the majors have really, and this is a history, right? It's been, a preference to buy versus build, and preference, they tend to discover. So I mean, junior is becoming more and more important to delivering new supply. And when you sort of look at projects, what do you look for, and what makes a good copper investment? Maybe Artem, I'll let you make a few comments.
Well, I have clear preference for buying producing or near producing assets for 2 reasons. Number one, I actually do believe in copper, and I don't believe all the negative stuff that some people say about the sector. And therefore, I'd like to get 3, 4 more, hopefully, assets in our platform before the copper goes too high. 2, we have access to the debt markets, and it's always good in any consolidation play to use debt. And you can only do it if you buy and producing assets that increases return on equity. That's a preference for ACGMetals.
Yeah, just to follow up on that, being on the investment side, when we look at something, it's we look at the management team first and foremost, who's the one running the asset, right? Then we'll look at the asset and the jurisdiction. But I like to look at the flow of money as well, and there's a lot of money starting to flow into the sector. Obviously, gold is a little bit crazy. We can talk about that all day, but it's starting to flow down to to copper and some of the more junior companies out there as well. Even just this morning, Taseko announced a $150 million US bought deal. They've got a mine in British Columbia in Canada, where I'm from, and some operations in the US, and then even some of the more junior companies that just have exploration assets. They're starting to announce bought deals. So over the past 3-4 months, the amount of capital inflows that we're starting to see, even on some of the more junior plays, we haven't seen that for 20 years, right? So it's been a long time. So there's a lot of capital starting to flow into the sector. I think it's just beginning, but again, it's going to be volatile along the roads. But we see a lot of value and a lot of opportunity there. Some of these stocks over the past 6 months are up 120%, but I think that's going to be just the beginning. Again, there's going to be some volatility, but the ones that have great assets and the right jurisdictions, the right management teams, again, the ones that can raise the capital, I think there's going to be a lot of value creation there.
Yeah. I think if I was looking to put equity dollars into a copper deal, I would be looking at where the royalty companies are pricing their investments. And I would be looking at the cost of the debt that the large private equity guys are charging for their capital that's going into the projects as well. It just gives a framework to think about the potential return on your equity investment.
I mean, the market seems to have certainly turned in access to capital over the last sort of 3, 4, 5 months. But it's been pretty tough, right? It's been pretty tough to assemble capital in the space. I don't know what, I mean, Arthur's
You can
done
talk
an amazing job, right?
chapter and verse on that, Artem. How long did it take you to get this acquisition over the line?
That one, no, not too long. I disagree. There is no issue with access to capital as long as you have good projects and a good.
You got to have the right
and a good management team, right?
Yeah.
So the good deals always finance themselves. The key issue is to find a good deal, and if you see so much capital going into exploration companies, most likely many of them will go bust.
Yeah.
So, but raising capital for a copper project as of today, if you have a clear path to production or ideally already producing and you have a team, this is not an issue. It is a question of picking up which capital. I had offers on the table from those capital private equity firms, and I refused to take them because you guys are so expensive.
Yeah.
Well, I think that's right. They're so expensive that it can leave no yield for the equity guys to come in, right? And so again, if you're looking to put your equity dollars to work, you got to make sure the big money that's coming in is going to leave room for us little guys to make a return.
Yeah. I mean, it's it's been an interesting journey, and you've seen new capital come into the space in terms of the sovereign wealth funds. It's I don't know whether you have a view as to whether that's more talk or whether you're actually going to see it. I think you've seen some of the Canadian funds enter the space, but not in a huge way. Maybe pull back a little bit. Increasingly, some of the sovereign funds in the Middle East are sort of looking, but it seems to me to be looking right now. I don't know whether you have a view as to whether that sort of sovereign capital is going to be impactful in this space.
I think so. It will in certain geographies, such as African Copper Belt, having a partner from a neutral country, which is not China, nor United States, and a Gulf with deep pockets, it can be pretty good. But they have very long decision-making times, and two, many of them want to attach offtakes to their investments. To import materials into whether it's Saudi Kingdom or UAE, and it's sometimes becomes a contradiction in terms. So the answer is yes, they can play a role in some geographies where you need protection, like U.S. government, probably going to be your next question, can play a role in these geographies, but it's tricky.
I mean, that was going to be my next question, is just the policies of the U.S. government, which is quite interesting, right? I mean, along the space, I mean, it's not just copper, but clearly looking increasingly about making investments into upstream, MP materials, etc. We had Lithium Americas, and being active around resolution, getting that going. I mean, clearly they're in shutdown, so I don't think too much is happening, but I don't know whether you've got a view as to, from what you've seen, where the US government is and whether that could make a difference here to getting some of those big copper projects moving.
Yeah, I mean, it's a great topic to discuss, and, deregulation is certainly what the industry needs on a global basis, not just the US. Unfortunately, it's not happening on a global basis. I shake my head as to what's going on in Canada. Canada's a disaster. Europe continues to be a disaster. Central and South America aren't making things any easier. So very few copper producing regions of the world is deregulation having an impact. The one bright spot, as you say, is the Trump administration and the move to deregulate in the US. But the caveat there is that, in my view, the permitting process in the US was always a two-stage process. There was stage one, which was the government process, which would take 10 years and would be very obstructionist. And one might argue that the administrators in the BLM and the US Forest Service and the Department of the Interior, et cetera, are still obstructionists, no matter what the Trump administration wants to do. But let's assume you get through all that and you eventually get your permit, and maybe that's being accelerated in today's administration. But then stage two of the permitting process in the US begins, which is the lawsuits. And despite what the Trump administration says, nothing the Trump administration can do can stop the lawsuits that say, okay, you have your permit, but whether it's Greenpeace or the Sierra Club or whoever decides to launch a lawsuit and you can't start your mine, full stop. And that process usually takes another 10 years. So this whole idea of accelerating mine construction, guess what? It ain't happening, which goes to our very opening point about the time period it takes to bring on new supply. So even when you have virtually the only administration on planet Earth that's being supportive, the Trump administration, it is going to have very little impact in the near term for new operations.
Yeah.
The world is breaking down. The world supply chains are breaking down into East and West. And as of today, you cannot afford not to pay attention and be guided by and be helped by So I have very strong views on that. That's the reason I put Mike Pompeo on the board of ACGMetals in the beginning of this year, but not to help us on anything in the US. Actually, for me to be able to meet the decision makers in certain geographies where without the US consent, nothing is going to happen.
Yeah, and just to add further to that, I think it just, we've touched on it already, it just creates more and more volatility in this sector as well, right? Like there's one asset up in Alaska that the Trump administration wanted to fast track. The market cap of the company went from 150 million to 2.5 billion, and arguably an asset over the border in the Yukon in Canada, arguably a better asset, is sitting there at $100 million market cap. Right. So, and that goes down to the jurisdictions that you need to be investing in as well and paying attention to. Right. So it, arguably, one asset may be better than the other, but it's it's the administration that, quote unquote, is going to be fast tracking that production, which probably isn't going to happen. But, the stock has gone crazy in the meantime. Right. But, is that stock going to come back down? Probably. Right. But again, the volatility and that's going to come down to, different jurisdictions and, the politics that come with it.
I think there's a lot of money to be made as an equity investor well before the production decision's even made, right? So we're talking about the roadblocks to getting into production. From grassroots exploration to a PEA, there's a lot of return for equity investors, and I think that's a very interesting area of focus.
I mean, geography is huge in the space. You have to go to where the resource is. Can't avoid it. But Artem, you obviously you mentioned you're hunting for acquisitions, geographies. Maybe just a comment from you as to how you think about the different geographies and opportunities.
Well, there is no copper under Trafalgar Square. Actually, maybe from the Roman times, but not of industrial scale. So you have to go to where copper is. We are currently on a Tessian copper belt, which extends from Pakistan into Spain, essentially, and there are plenty of opportunities, and it makes sense for us to buy, 2 or 3 assets in that broader geographic area, which includes Eastern Europe. Can also say Central Asia is also there, and I think those geographies have been overlooked, and not enough exploration and investment went into that since the collapse of the Soviet Union. But also, if you're in copper, you have to look at things in African copper belt. That's where the big game hunting is, because in our geographies we can go after assets, 50,000 tons of copper. In African copper belt, that's 100,000 tons of copper is a small asset. So that stuff is interesting. And then obviously you cannot not look at South America. For me, is I'm focusing on producing assets. It's only Chile and Peru, but people taking longer view on Argentina, which I think will be interesting.
Everyone in this room is probably looking for, the way, how do I play this? Obviously, as Stephen says, probably the best money to be made is through earlier stage and exploration, success. Not everyone in this room is qualified to look at a property and make a valid assessment other than, a guess as to whether that property is going to have exploration success or not. So you're probably better off to invest in the smaller producers. Certainly not the larger producers. I hope no one in this room is buying Rio and BHP and, because that's certainly not the way to play copper. What you want to do is you want to buy the companies that BHP and Rio are ultimately going to buy. And that's where you make your money if you're not making your money at the exploration stage. One good thing about those companies, I think, going forward, is multiple expansion. You look at, the Gibraltars, the Tasecos of the world, or the Capstones of the world, these mid-tier copper plays. I think, traditionally, and this always drove me crazy, that success in the base metal industry was rewarded by a 4 times EBITDA multiple. That was success. We've found an ore body, we've brought it into production, we're making hundreds of millions of dollars, and the market would put a 4 on it, and there's your market cap. That's your success. I always got a kick out of, in Vancouver, there were 2 very successful companies. There was Teck, who was a big copper producer, one of Canada's great mining success stories, billions and billions and billions of cash flow, and it was rewarded for that multi-generational success with a 4 times EBITDA multiple. Across the street was the head office of Lululemon. Lululemon doesn't own anything. They don't own the stores that they're in. They don't own the right to make yoga pants. All of those yoga pants are made in China or now Vietnam or Indonesia. They owned nothing. Lululemon trades at 100 times EBITDA. Why does one company that produces a good that is vital to humankind trade at 4 and the other one trade at 100 that has not the exclusive right to make yoga pants, but has a right to hire someone to make them for them? It drove me crazy. It makes no sense. I think we are now finally entering an era when we realize, when we start coining the term critical metals, it's actually underlying the point, hey, yoga pants aren't critical. Copper is actually critical. Maybe it deserves more than a 4 multiple. And so we are starting to see multiple expansion, and companies are now trading at 7, 8, even 9. The glaring exception to that rule is Cameco. Cameco, because it was big and because it was somewhat unique, always traded for the last 40 years, not just recently when uranium has been back in favor, but for the last 40 years, it traded at 20 to 30 times EBITDA. There's no reason why Capstone or Taseko shouldn't trade at the same sort of multiple, because copper is as critical as uranium is. So we can have stocks, if you look at that, go up 3 or 4 times, and now Artem is salivating because he sees his valuation going up 3 or 4-fold, just by doing what they're doing with no other acquisitions, with no other expansion. And I think that's the opportunity for everyone in this room. You don't have to go out and buy an exploration property and hope, shake the dice and hope that they get success. Just buy a Capstone and ride the increase in multiple, even if the copper price doesn't increase. Just on multiple alone, you're going to make 3 or 4 times your money, I think, in the next 5 years. I go back to 1995. Magma Copper was a big copper producer in the US, if anyone remembers that name. And copper was just starting to run. And Magma was, for the first time in 15 years, making money. And I bought the stock because it was trading at a multiple of 1 times EBITDA. 1 times EBITDA. I said, this is just too good to be true. They're giving this stock away. I'm going to make all my money back in the course of the next 12 months if copper prices stay the same, never mind if they escalate. That wound up being a really good trade. And then 2 years later, BHP took out Magma in 1996. They paid $4 billion for it, and they paid 3 times EBITDA for that $4 billion. And back in 1996, $4 billion copper acquisition was a big deal. That would be equivalent to like a $40 billion deal today, an Anglo-Tech type deal. I don't think you're going to see those multiples again in our lifetime. So I think that's the benefit to everyone in this room.
Thank you, Warren. Our shares are up 160% in the last 3.5 months. I was thinking we're going to get another 200% in the next 12 months, but now 3 to 4. That's good.
Fantastic. And I mean, I think, tough to follow that really, but I mean, I think, you know, what I could say is certainly from my time in the US and, you know, raising capital now, you're actually seeing so much more about critical minerals. Copper is in the dialogue at the moment as well. Just that general appreciation of, you know, what it's doing. So some of the thematics which you were bringing up, I absolutely see it from, you know, investor conversations. Whereas you go back even 10 years ago, longer, it was a bit of a grind. You really had to educate people as to why they needed to be in the space. But I think it seems to be, you know, seems a hell of a lot of interest, and that alone is going to drive this momentum.
So I agree with what Warren's been saying, but I have a question. What's caused that multiple to be held back, and what's going to change that's going to lead to the expansion that you're hoping for, Warren?
What held it back theoretically was inconsistency. You know, yeah, you're making money now, but 5 years from now, you're not going to be making money because that's the nature of this metals business. It's feast or famine. So we'll give you a 4 multiple on 0 EBITDA in the downturns, but in the upturns, when you're finally making money, we're going to squeeze it to 2 times EBITDA because we're not going to reward you for all that money you're making because we know it's feast or famine. And so it's that inconsistency. What's changed is these, hopefully, massive pending shortages that make people realize, okay, this is no longer a feast or famine business. If you've got a long life asset, that's a license to print, hopefully, more and more money for the next 20 years. And it's going to be more of a consistent business rather than a boom-bust business. That's the hope, Gary.
Very good. Well, look, I'd just like to thank the panel, and I think we'll wrap up there. Thank you.